Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our daily technical analysis update of commodities. I'm going to give you my opinions around them. We're going to work through the dollar, yields, precious metals, and then through the commodity ETFs and commodities that I follow. If you guys need any help with anything commodity related, definitely check out finding-value.com. Sign up to be a platinum member. You can use the word discount in the coupon code for a discount. And we're going to dive in here and start with the dollar. So let's do it. So here's the dollar, the DXY. I still think that this will eventually work its way lower. It is slowly working its way lower right now, but it still looks like we maybe could go up in the short term. So I think big long term, up higher, topping pattern, down lower. But in the short term, we can see that there's some buying pressure through here, and then the sellers are really not selling this thing off. It looks like it's trying to turn and actually head higher here for some short-term move to the upside. TNX is the 10-year yield. The thing that I see here in the short term, we've got lots of selling pressure on this side over here. And if you can see this bounce, it's not really bouncing much. It looks like it's going to roll over and head lower. I think this rolling over and heading lower is going to be, hopefully, fuel for precious metals to go on higher. When rates go down and when there's fear in the market, that's when precious metals really start to wake up, and they are positioned very well for, I think, a move on higher. This will also have negative impacts on some other commodities. What this is saying is that we could see a short-term problem in the market. And I'll show you what that looks like maybe on the 2-year coming up. Now, is this kind of that topping pattern? I think it very well could be. And what I'm looking for is I want to see which direction this goes. Right now, I'm leaning in the direction that it could potentially go lower for the 10-year yield. The 30-year yield, it was slightly lower today, but that also has the making of what could potentially look like a reversal to head a little bit lower. Is it going to break this trend line and go on and move down? Well, we're going to have to wait and see that. But we do have some selling pressure through this mix in here, where we've seen some strong selling pressure. Bond prices, they move opposite of yields. We're still moving sideways in bond prices. So that's where we're at there. Big picture view, the way that I'm kind of viewing this, and I might have it wrong. This is your kind of shoulder, head, shoulder. So that's we can kind of do it like this. We got ripped to the downside. We broke through the trend line. We did a little return move, and you could see the bearish engulfing, which means we're going to head lower again. Boom, boom, boom. And we're still getting selling pressure in here, which means we could still head lower in bond prices. But it depends on what yields do, depends on fear on the market, depends on all those things. Could we come all the way back up and then roll over? Yeah, we could. And we're gonna watch and see that every day on the channel here. So looking at the TYX TNX ratio, and this ratio is the 30-year divided by the 10-year. And what I've noticed is that when this goes up, gold goes up with it. When it goes down, gold specifically does not like when the curve is inverting. That means higher yields, generally speaking. And to me, we've broken this downtrend here, and it definitely looks like this is ready to go higher. In the beginning, it generally kind of works its way slowly and then gains steam, because remember, this is on a monthly basis. We just broke it recently, and it's probably going to take some time for this to gain some steam. So we've broken out. There's the breakout there. We've come on up, and you can see this pullbacks with really small candlesticks. It just doesn't have the oomph that the short-term interest rates are really yanking this thing to the downside. So I think that this is going to move higher. And I think it's going to be positive for precious metals in the short to medium term, and maybe even up to 12 to 8 months. 12 to 18 months, sorry. So maybe even a year or more. The 2-year yield, this is what the 2-year yield is, and this is where I'm getting a little bit, what are we going to do here? This is the selling pressure that we saw. It's a massive bonk on the head, rapid selling, or I should say rapid buying. So it's rapid buying of bonds, yields rapidly going down. We're getting this bounce here in the short term, but this bounce does not look convincing to me. We've got some momentum coming up. You can see the opening and closing prices are basically coming together. And I think eventually this is going to roll over, and eventually could be very soon. When that rolls over, it means that people are running to bonds probably because they're afraid of something. It doesn't mean that it will do it immediately. Maybe we work our way higher a little bit before putting in another shoulder here. There's the little shoulder that I'd have drawn in here, and it could be a shoulder head shoulder. And then we come back up like this or something and then roll back over. So that might take a couple of weeks, months to do that. So in the short term, be ready and be watching this, because if this rolls over, it means that there's fear in the markets and maybe something's broken deeper than what we think. We don't know what it is yet. And this is the US 2-year, 10-year yield. So this is the inversion of the curve. I inverted it. So this is the curve inverting as it moves higher. But notice how we squeezed up, we've broken to the downside. And the question is that everyone should be asking is this bank failure the beginning of something that's bad about to happen? Or are we going to go back into an uptrend where the banks, basically we just fly right by it, it's not a big deal, and there's no big deal there? I'm not sure. I'm playing this more defensive. So I'm thinking that we could potentially head lower in eventually, where I'm playing a little bit more defensive. I'm not selling my positions or anything like that, but I'm accumulating different assets and maybe even accumulating some cash just in case. CRB index, again, we're right at that resistance line. You can see that white line. And are we going to break up, or are we going to come back and roll over? We're going to find out a couple days, the rest of this week, trading days, and see which way we break here. CRB to S&P 500 coming back a little bit, down 1.5%. Big picture view, you can see this. We're still putting in wave 2, which is a pullback wave, after making a wave 1. So this hasn't bottomed yet. If you want to know, a general good area to bottom that usually bottoms is 0.618. It's just down here below it. And that's a general rule of thumb of where we could potentially bottom. That's kind of the average pullback is 61.8%. Could it go back down to 786? It very well could. Gold. Now gold's down 0.5%. Today we had slightly inverted yields with a slightly stronger dollar. It's really not too much to talk about. This still looks good for gold to move higher. And the way that I look at this is I look at the buying pressure, those big green candlesticks. Is it taking less time to move up, more time to pull back? Yes, it is. Therefore, I remain bullish for a move higher. So I still think that looks good. Silver also being quite resilient, up 0.1, and we'll see if that can continue higher. We've had a pretty big move, so that we may get a small little pullback, maybe with small little candlesticks or something like that, and then we rip it again. Platinum, it's hanging in there, up $6. And, could we get a little bit of a rollover? It's very well possible. I think precious metals are the spots to be, though, on a long-term perspective. Nice big squeeze up. We've broken it, did the retest, and now we're just about to hopefully take a big move to the upside. There's a little trend line that we can break. XAU to gold ratio, another thing that's real positive here, and what gets me even more bullish on precious metals is that people are accumulating gold and silver mining companies over gold itself, and we're seeing an outperformance of this ratio, gold and silver miners versus gold. If we back out and we look to see what this white resistance line is, it's basically where we paused here. We hit it a couple of times, both top and bottom, and we're trying to break through all this. We're very close to a breakout of this ratio here. where we need to break this line for happiness. If we break this line, it means gold and silver mining companies are going to outperform gold. We're getting real close here. GDX, this is the gold and silver mining companies. GDX slightly lower today, still looks good for a move higher. We've got nice, good momentum coming on up and a small little pullback day. Still looks good, got the bloody nose. And once we start breaking through some of these resistance areas, I think we're going to see a bigger move to the upside potentially. SILJ also hanging in there. We're getting a little bloody nose today. Let's see if this thing can continue on up. Again, I'm not playing the short term. I'm playing the long term. You can see I did this on a longer term time frame. You can see that we're real close to breaking to the upside here. So SILJ is definitely one to watch. And this thing does move quite rapidly. It generally moves with money printing. So if they come out and they say they're going to do QE bailouts, or if there's a problem in the system, what the market does is it sells off. They go into bonds if they think something's going to crash. Bond yields go down, bonds crash, and then they do a money printing deal. And this really rockets when they print money. And I think that is sniffing out that they're printing money already. Their bank balance sheet is going up, their assets, and that they could potentially do more. Crude oil down 0.45% today. I'm still curious on which direction this is going to go. We're right at resistance here. You can see we're getting a little bit of buying and selling pressure back and forth days. Are we going to sell off here, or are we going to roll on higher? I think if we break above this area up here of $82, I think we're in the clear because we're making a higher high. But right now, we still have lower highs and lower lows, and that trend line has not broken yet. Natural gas breaking this trend line, moving on higher today, looking a little bit better than before. But if it stays down here for a little while, it's going to drag some of those natural gas companies as hedges roll off. It's going to drag them down a little bit. XOP, yeah, you know me. So looking at XOP, you know, I still think we could see some downside pressure if the markets are scared. So if we were to kind of get this trend line going through here, we've broken through that trend line. You can see that trend line there. We've broken that to the downside. We've got some, you know, basically the high here, and we've got lower highs coming here. And we're coming back up, and I think we're going to do a retest, and then we're going to roll over again. What that means is that we're seeing how people are positioning in the markets from oil, because oil is an inflation play. And if people are scared, it's definitely not going to be, the inflation plays are not going to be in favor. So what I'm seeing here is, you know, we could see further downside here in the short term. And if we go like longer term, we can see a shoulder, a head, and a shoulder, and an inverted head and shoulders. And maybe we come on back here to $90 or wherever the bottom was back here. We just come on down with a little bit more selling pressure and fear in the markets. OIH is also doing something very similar. We can do logarithmic. You can see the shoulder, head, shoulder that is developing in OIH. Now, we can see the selling pressure here in the short term where we've got lots of selling pressure. And again, we're kind of coming up, and I think we're going to roll back over, maybe do kind of like an A, B, C correction or something like that. At least that's what I'm seeing. Sprout Physical Uranium Trust, down 0.77% today. Again, we've got this, it looks like it's trying to move higher here. It still looks ready to move on up in the short term. Some other people, depending who you watch and whatnot, they're saying this is kind of a shoulder, head, shoulder developing. Scott and I, back in the day, where we would talk about these fake out head and shoulder patterns. But if you combine lower interest rates and fear in the market, there could be something else going on underneath it. So that's usually what I refer to. And we still have some good, strong selling pressure in this little cluster of candlesticks there. URNM, it does look like we're getting a little bit of buying pressure coming the last couple of days, a little bit of relief, and we got to see if that momentum can continue. We've got lots of selling pressure before it. Is this a scare in the market where we scared all the retail guys out? Now we're going to head on higher. Yet to be seen, but hopefully can continue on higher. Looking at tan having a nice strong day. I do think this could go and move on up, but we're still squeezing. Squeeze, squeeze, squeeze. COPX also up 1.7%. Is this going to keep going and rolling higher? Yeah, we'll see. And is this, let's see if we can get this thing to load here. Let's do the weekly candlesticks just to show you guys. Is this a shoulder, head, shoulder that is potentially forming where we head lower in a fear event where something happens? It's possible because we've got the yields, people running into bonds, but copper is really short on the supply side. Very interesting mix here. And this neckline isn't exactly a good neckline. So yeah, we'll see. Lithium. Looking at lithium, you can see this guy's up 2.7% today. Are we going to break through this resistance trend line? We'll find out. We'll find out tomorrow, but looking good. REMX also heading higher. Again, we're below this long-term resistance line, the blue line going across. We've got SPX killing it today, up 1.42%. And that does look like it could continue higher. Quite a strong move there. And a good strong move out of the NASDAQ. Still looking good. Looking at EEM, emerging markets, also moving higher, 0.28%. I still like the way that this thing looks. Is this a little kind of shoulder, head, shoulder developing? I don't know. We'll see. But that looks good. XHB, the home builders, right on resistance right now. So we're just hanging out in the trend line. Move still looks like to me that this could roll over to the downside because we're under this, and it does look like one gigantic. It's back out here. It almost looks like a shoulder, head, shoulder, but the neckline is definitely not there. Copper still hanging in there. The shortages in copper. Are we going to break higher or are we going to come back down? Well, we're going to find out here shortly. Lumber's still struggling. Lumber is a leading indicator. If we lose the housing market, that's generally a bad thing. And using lumber, and I know some people use lumber to gold ratio. We can throw that in there too. Here's lumber to gold ratio. Lumber to gold ratio continues to head lower. What that means is lumber is more or less a feeler. We'll call it a feeler of the housing market or housing starts. Gold is more about scare or fear in the market. So you can kind of look and see that this has got some sort of topping maybe pattern, and we've been heading lower over time. So we could continue to see this go down, especially if gold breaks higher, which gives us more of an indication that maybe there's problems in the market. Iron ore continuing to move sideways. Still looks pretty good for a move higher. Nickel moving on up today. Maybe we're going to put in some sort of bottom here and start to move on up. Aluminum also moving sideways. A lot of sideways action days. I think aluminum is going to do incredibly well in about 6 months to a year. But this is a good spot to be looking. Baltic Dry Index, that is getting that pullback that we thought we were going to have. I do think it's going to pull back before heading higher. Looking at Newcastle Coal, we're trying to put a base in here. I'd give it time. I wouldn't be jumping in front of this train. We might still have more downside in it. And then we've got Ethereum. This is more of a liquidity measure, and maybe this is sniffing out liquidity coming into the system. Same with Bitcoin. And that's why these two are higher, and it's an inverted shoulder, head, shoulder with a breakout and a potential move on higher. So that's what I've got for today, guys. I'm still in the camp. If we see yields go lower and we see that TYX, TNX ratio start to shoot on up, that there is a problem in the market. It could be the banking crisis. It could be something else. People are positioning that way. I just don't know why they're positioning that way. That's the only thing I don't know. And no one's going to know until the news comes out later. But that's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. and subscribe to the website if you'd like. We do have a Platinum midweek update coming up that I'll be releasing today. And we've got a 7 a.m. Mountain Standard Time Saturday Q&A session. We'll see you there. That's all I've got. Catch you next time. This is Finding Value.